The S&P 500 is up 7 consecutive weeks. In December, it's still positive. The Nasdaq 100 is only 0.537% or 95 points from its all-time high, and the Dow Jones Industrial made a new all-time high. Now, market participants are still showing no fears. The 10-year yield fell below 4% after the Fed have hinted on rate cut. So what is going on? What does the Fed know that it is not telling us? Welcome to another weekly S&P 500 and financial market analysis. We saw the S&P 500 surge more than 1.3% after the latest FOMC rate announcement and on a hint of rate cut from Jay Powell. The S&P 500 did not make a new all-time high, but it is near and it is continued to march toward the all-time high. Now, the small cap, the Russell 2000, continued to lead the market for the month. It is up 9.73% month to date. And year to date, the Nasdaq 100 is up almost 52% at 51.95%. And the S&P 500 is up 22.91% year to date. But the broader market index, the New York Stock Exchange, is only up 9.39%. The Russell 2000 is still trailing on a year-to-date basis at 12.71%. Now, the S&P 500 is up 7 consecutive weeks, and that only happened one time in the last 10 years. Now, would it make it 8 consecutive up weeks? That too has only occurred one time in the last 10 years. Now, the Russell 2000 was again the top performer for the week with a gain of 5.55%. And the Dow Jones Transportation is just a 0.25% less. It was the second best performer for the week with a gain of 5.29%. And the worst performer for the week is the S&P 500 and the New York Stock Exchange Composite. They both gained almost 2.5%. The VIX is in the low teen. The market participants remain fearless, and the put-call ratio telling us they are risk on. The put-call ratio was down near the 0.5 level, and it ended the week at 0.66. The up-down volume ratio also quite strong on Fed Day and post-Fed Day, indicating strong buying pressure, but also shows some strong selling pressure on Friday. Same picture for the daily advance decline. On Wednesday and Thursday, there was broad market participation on the rally and broad market participation on the pullback on Friday. We did see a spike on the number of stocks make new 52-week high on the New York Stock Exchange on Thursday. There were 382 stocks make new 52-week high. This is the highest level since June 2021. But we are still seeing a negative divergence between the cumulative AD line and the S&P 500. See, the cumulative AD line is still below this July peak, while the S&P 500 has already exceeded this July high, and it is getting near the all-time high. The Nasdaq 100 did not make a new all-time high last week, but it did close with a new 52-week high. And the strong buying pressure showed up on Wednesday and Thursday, just like the New York Stock Exchange. And there were a little bit of selling pressure on Friday. The daily advance decline also showed broad market participation on the upside on Wednesday and Thursday. We saw a surge in the number of stocks make new 52-week high on Thursday in the Nasdaq. And this is the highest level since March 2021. There were 471 stocks make new 52-week high, and the number of stocks making new 52-week low held steady. Not much has changed on the negative divergence between the cumulative AD line and the Nasdaq 100. This continued to be a red flag. Now, looking at the 11th sector in the S&P 500, the technology sector continued to be outperformed, with the healthcare continue underperform, and the consumer discretionary has been outperformed in the recent days here, and also the financial is also showing some outperformance in the recent days. But the communication is starting to show a little bit underperformance, and the XLI, the industrial, is also showing some outperformance recently. And consumer stable continue to underperform, so is the energy. Now, we did see a outperformance from the real estate recently, and also the material, we show a little bit of a outperformance here, but the utility continue to be underperformed. And looking at some other sectors, the semiconductor is strongly outperformed the S&P 500. The oil is underperformed, so is the oil exploration is underperformed. Now we are seeing the retailer is starting to show outperformance here, and so is the biotech. And we are seeing a little bit of a outperformance from the mining. And the banks and the regional banks, we see outperformance in the recent days. And look at the home builders, strongly outperformed the S&P 500. And we are seeing a little bit of an outperformance from the long-term bonds. And here, looking at the 10-year versus the 2-year yield curve, we are seeing it's still inverted, and it is moving a slightly lower, sitting at minus 0.536. In the 10-year versus the 3-month, we also see it move lower and sitting at minus 1.477. So it is still inverted and pointing to a recession. And here on the 10-year yield, we see it dip down below 4% on Thursday and closed the week at 3.929. In the US dollar, it came down to this 102 level and got a bounce. So we'll see, will this bounce bring it back up to this 103 area, or will the dollar resume its downward move to the 100.80 area here? Now the dollar future is sitting back above the composite point of control here near this 104 area. And the oil avoid coming down to this 67 level and got a nice bounce back up. So we'll see, will it get back up above this 75 area near this composite point of control, or will it come back down and this time come and test the 67 level? Silver came back up above the composite point of control and back at the $24 level. We're still looking for silver to move back up to this 26 area. Now gold is still above the 2000 level, and we'll look for gold to move toward this 2300 level. Now, let's take a look at the indexes, and starting with the NASDAQ 100. Majority of the FANG stock ended the week higher, and that helped lift the NASDAQ 100. But the heavy lifter was really the semiconductor stock. It is only 0.84% or 142 points away from its all-time high. And the Russell 2000 came up to this upper edge of the balance area. And if it break out from this balance area, then look for 80% extension move up into this 2300 area. But watch for retracement back down to this 1640 if it get rejected up here from this balance area. And the Dow Jones Transportation is still trying to come back up to this 16,730. But watch for the potential pullback toward this 13,460 area. And the Dow Jones Industrial made a new all-time high, so we're going to see, will it be able to come up to this 38,000 level, or will this be the top for this unconfirmed high? I will elaborate that in my final note section. And the New York Stock Exchange Composite is still trying to come back up to this 17,000 level, and it is still quite a distance from this all-time high. The S&P 500 surged above the January 2022 high at 4637.30 and closed above the upper range of the weekly expected move, but it is still 1.66% or 80 points away from this all-time high. And for the coming week, the market is not pricing in an all-time high, and the upper range is below the all-time high, and it's between 4780 and 4766.50. And the lower range is between 4671.90 and 4660. It will only be the second time in the last 10 years that the S&P 500 will be up 8 consecutive weeks if it move up to the upper range and close above the 4719 area here and possibly come up and put in a new all-time high. But the odds could be in favor of a pullback and could see a back test of this January high at 4637. And looking at the E-mini S&P 500 future, we see that it left a poor high and a poor low from last Friday and a bunch of poor structure last week. And from this volume profile, watch for a pullback to these low volume zone here for the coming week. And watch for this low volume zone between 4740 and 4710. And also another low volume zone here, that's basically the gap between 4660 and 4620. Now let's take a look at the ETF for the index E, starting with the diamond, the ETF for the Dow Jones Industrial. We see that it also made a new all-time high and closed above the upper range of the weekly expected move. Now it did close Friday on a down day and also printed an inside day candle to look for a possible pullback for the coming week. Now, for the coming week, the upper range is between 377.80 and 376.20, and the lower range is between 369.10 and 368.30. The market is pricing in a back test of the old all-time high near the 369.50, and that's in confluence with the lower range of the expected move. So keep an eye on this level here if a pullback occur. SPY closed above the upper range and found some acceptance up here at this 470 area. And the upper range for the coming week is between 476.30 and 474.10. And the lower range is between 464.60 and 464. Now, the market is not pricing in that all-time high. Watch for possible evening star type of bearish price action, and that could pull the price down to the lower range, and which is also in confluence with this low volume zone here. Now, the Q got almost 1x of this balance area extension, and it closed above the upper range of the weekly expected move. The upper range for the coming week is between 412 and 410.80, and the lower range is between 399.90 and 397.70. The market is pricing in a potential move down to the low volume zone here, this area here, and that will be in confluence with this lower range of the expected move somewhere near this 400 area. Now, the IWM came up to the upper edge of this balance area and got rejected from this edge here on Friday. Now, it did close from the above the upper range of the weekly expected move. The upper range for the coming week is between 203.70 and 201.90, and the lower range is between 191.70 and 192.20. The market is pricing in a move back to the September pivot high here near the 191.86 and filling the post-Fed gap on the downside. Now, if the price continue to move up, then look for this volume, this low volume dent here at 203.72. And that is in confluence with the upper range of the weekly expected move. So for final note, the Dow Jones Industrial made a new all-time high, but unconfirmed by the Dow Jones Transportation, and that put the Dow theory in play. So unless the Dow Jones Transportation come up and take out the all-time high, the recent high from the Dow Jones Industrial could be the top of this cycle. Now, the SP 500 is near its all-time high, and so is the NASDAQ 100. It's only 95 points from its all-time high. So if either the SP 500 or the NASDAQ 100 makes a new all-time high, then that will validate the Dow Jones Industrial recent new all-time high. Otherwise, beware of extended pullback from the indexes, and that pullback might reveal the reason why the Fed suddenly pivot on rate cut. That's it for the week's recap and analysis. Smash the thumbs up to give it a like and help promote this video on YouTube. Subscribe to help grow this channel, and visit my newsletter at Substack for additional contents. The link to my newsletter is smtraderca.substack.com. Thank you for watching and good luck.